This is Brian Bowen with Integrity Financial Planning. We get a lot of inquiries from prospective clients and existing clients who have worked really hard at investing their money, and a lot of it has been saved into real estate. And you get to a certain point in life, and sometimes this is very much a financial decision, but it's also an emotional decision. And sometimes it's forced upon you due to health related issues, or maybe even a family member, a spouse's health. And you can't do it anymore. It's too much. It's too much to manage, or even if you have someone else managing it, it's just too much stress. So, the real estate can be a great cash flow for you in retirement, but it is something that does need to be managed, and there's decisions that need to be made. So a lot of folks go from active real estate investments because they just they want to enjoy life. They want to be free. And so a way to do that is a Delaware Statutory Trust. And that is a way to actually take the proceeds from your real estate, sell it, and do a 1031 exchange, which we have a whole nother video on 1031 exchanges and some of the pros and cons and things that you need to do. 1031 exchange is great. You sell the property, you have 45 days to identify. The struggle that we find today in this seller's market is it's easy to sell the property. It's hard to find properties to reinvest the proceeds. So you sell it, but if you can't identify 3 properties that you're going to move the money into within 6 months or 180 days, then you're going to have to pay the tax. And so what a lot of our clients are looking at is what's called Delaware Statutory Trust. And that's a real estate ownership where multiple investors each hold an undivided fractional interest in the holdings of the trust. And the trust is established by a professional real estate company, or referred to as a DST sponsor. The sponsor identifies, acquires the real estate assets, but more importantly, manages it all, so you are not the property manager. And some people go, well, I can't allow that. I want to manage it all myself. And that's fine. Continue to do that if that's what you want to do. But if you're at the stage where you don't want to manage, or maybe can't, because that's what a lot of our clients, they get to a point health-wise, or their spouse does, and they need to take care of their spouse, they can't. And that's different. Now, the children are across the country. They can't manage it. They don't trust the property manager, and they don't have time to keep up with the property manager. I've had a property manager in investment real estate, and after the tenants moved out, trashed the property, and I ended up paying tens of thousands of dollars, I realized that all property managers are created equal. Some are really good, some are really bad. So Delaware Statutory Trust is a professional company. Typically, they might manage billions of dollars of real estate. This isn't their first rodeo. But the idea with that is it offers many tax benefits, income potential, and you can reallocate it into multiple properties. Maybe you only want $50,000 in one property. You want to be into self-storage, which has done great over the last 20 years. If you want to be some in student housing because you love that college town at your alma mater. You want to be in healthcare, which is double digits returns typically as well on some of these properties. Multifamily, which most areas in the country can't build the apartments fast enough. The younger generation isn't buying homes because it's so expensive. So multifamily is doing well. And you still have the tax benefits of real estate. Now it's a passive investment. It is a little different. You got to have passive, passive losses to set off the passive income. But the idea is you still get the benefits. And if you keep it till you pass away, then there's a step up in cost basis and it's tax-free versus just selling it and giving 30% of it over to the government, which is typically what a lot of people do because they don't know their options. A Delaware Statutory Trust is a way to keep more of your money invested, because if you don't give it away, then it can be reinvested. That's time value money. You're able to continue to grow and pass it on. That means more income for you, more income for your spouse and family that you care about the most. So, Delaware Statutory Trust also can be spread out all over the country. It doesn't have to be in your area. So you're not limited to just what's available on your local real estate market, be all over the country. So listen to the next video where we're going to talk about charitable gifting strategies and things that if you want to sell your real estate, maybe don't go back into real estate at all. You could put it back into the stock market with this strategy. Thank you so much for listening.